All right, Bismillah. Let's get into it. Reviewing price action utilizing ICT based concepts and strategies. Predominantly, it will be the ES for today. We always want to make sure we're making sound decisions, especially in the market. I read that the market is like the battlefield or war, except not with blood, but with money, right? So you can either bleed out or you can be profitable, right? That's the goal, right? You are your own worst enemy in the market. In any system that you have, the human element is the worst part of it. So we have to be on the top of our game, be as consistent as possible with the things that will yield us positive expectancy or positive value. As we say, day by day and in every way, we're getting better and better. Day by day and in every way, we're getting better and better. Lock in, focus on 1-2 strategies. Stick to your rules. It's nothing surprising here. Everything is a direct result of your system. So if you are losing, then your system is flawed. If you're winning, then your system is working for you. If you deviate from your system and you find that you won, the market is playing games with you. And if you deviate from your system and you continue to lose, then you have to look at yourself. Anyway, let's move forward. Honestly, I just changed this red one to black because I find the red color to just be, it does something to my eyes or something. I don't know what it's doing, but it's annoying. And I usually have my green candles as white, but it doesn't matter, right? Looks like an old newspaper or something like that, but whatever, we're gonna keep it like this. All right, for the sake of time, because everybody's in a rush anyway, just wanted to highlight, this is the ES, the March 2025 contract weekly, and I believe I highlighted this in previous videos, the weekly order block. I only chose this down close candle. I also highlighted here for this one, this swing low, and we got into swing lows before, swing low, swing high. So this was letting you know that this is a swing low, right? Candle with a 3-bar candle pattern with a low that's surrounded by 2 higher lows. In this case, this is a swing high, a high that's surrounded by 2 lower highs, right? And that's that. All right, so highlighting this, and we highlighting this gap as well. All right, so this is a volume imbalance here. This messed that up, but you can fix it. This right here that I just highlighted here, my volume imbalances always make them blue for whatever reason. So this is the volume imbalance, and this part, the rest of it is the fair value gap. I just scooped them right in together. Like, yeah, where you gonna anchor this? Where you gonna anchor this at, right? So yeah, you have no choice but to kind of like do that, right? So let's get into it, right? Beginning of the week, I think since last week I highlighted this order block, and then I highlighted the 4-hour, some 4-hour levels. So here's that weekly order block that we highlighted on the weekly time frame. Here's that same weekly sell side liquidity or swing low here, and we had price run through it here, retrace into a quarter of this news candle, this huge down close candle. And what I did here is this anchored fib to here and used 25 quarters, like 0.25. So here we go, right? Quarters of the candle. All right, so where were we? All right. Oh, additionally, we highlighted the larger range here. That price is currently trading in this week. It's technically trading in this smaller range, right? But this is the more dominant of the range. So, so we had a pullback here into 25% of this candle, and all this inefficiency. Then it dropped. Then it pushed up higher. So this would be, all right, you could have took this as like a turtle soup entry, and you could have gotten out in enough time here, especially like on a lower time frame. Then the pullback again, or this continuation pattern, taking out sell side here on this time frame, and then you have a push higher. So when you have, right, so the moment it broke this external range liquidity, you could have highlighted the entire range here. Highlight the entire range here. To the right, to the right. Bam, right? So there you have your optimal trade entry long here. And you think about equilibrium, as it says right here, equilibrium. I can make that bigger, but don't want to crowd the chart too much. But let's run that across the chart. Didn't have to do that, but all right. So that's the equilibrium range between this low and this high here. So this is the difference between price being in a discount versus a premium. So optimal trade entry long into this weekly inverted fair value gap that we highlighted on the weekly time frame, obviously, right? That's this. Okay. So you could have either utilized the quarters of this bearish inefficiency as targets, as support resistance. You could have calculated that as well. And you have to keep in mind that all PD arrays on the lower time frames are subordinate to the high time frames, meaning that, and I just love these little things. All right, so it says one thing, it says challenge yourself and have fun. Challenge yourself and have fun. So they just remind me of these dolls, these Russian dolls. Price action remind me of these Russian dolls, like these dolls that stack and fit into each other, right? Smaller ones, like the big one, then the medium one, small one, small one, small one, small one, small one, like this, right? And that's why you have a range. That's this one, optimal trade entry long, inside of another range, right? So you have this range inside of another range, same as these dolls, right? PD arrays are the same. Like this inverted fair value gap is on the weekly time frame, is also like the same as that doll, right? All right, sounds like it's foolish, like I'm talking gibberish or something, but it's real, right? It's just like ICT says that every that market maker buy and sell models is the market. It's how the market delivers price. It's literally, I don't want to keep jumping in and out, but it's literally the same as those dolls again. Like is a range. Like, so this is the original consolidation. This is a pullback into this consolidation. Potentially. Doesn't have to happen like that. So again, this is like same as I just described, like a range inside of a range. And you want to see how each range interacts with each other, right? Especially if you could identify the high time frame draw on liquidity. Then one point I want to highlight is that just because you have a potential draw on liquidity, it doesn't mean that price has to reach that draw on liquidity. And you may remember that I was looking for price to get into this violated fair value gap, bullish fair value gap, which is now an inverted 4-hour fair value gap. It didn't make it. Right? Good, right? It's but you have to remember that it's a draw on liquidity. I was looking for this SIBI, this imbalance, this inefficiency to be rebalanced and then drop. But didn't do that. And you have to remember, same as I just highlighted, that the higher time frame or the lower time frames are subordinate to the PD arrays on the higher time frame. So which one was the dominant one here? That weekly inverted fair value gap. And you can see it clearly here. So that's that. So this was the optimal trade entry long. So we had a run on stops. So we had a run on stops, and this is the strategy. Where is let's see. Oh my darling. So this is the I just like saying, oh my darling Clementine, don't mind me. This is the strategy, right? Wait for a run on stops, wait for a market structure shift, wait for the pullback into a premium or discount. That's 50% of the range is the key. If it's like if it trades into like 61.8 or 61, I'm gonna say 62% into like 78.6, that optimal trade entry range, that is great. That's ideal. But you have to trade what you see on the chart. Sometimes it doesn't pull all the way back down to those levels because of the PD arrays that price is targeting, right? Could be an order block, could be a fair value gap, could be a breaker, right? But trade what you see, right? That's the goal. Trade what you see is the goal. So last time I highlighted this, here I just have it as one line here. Last time I highlighted this, all the three of these down up close candles, like this, rather show than tell, right? Like I'm writing a book, show don't tell. I highlighted it like that, and you can see. Oh, so that's a little. Okay, I used the bodies. I didn't use the wicks. And you can see price traded down into the halfway point of that breaker. And the breaker is a low, in this case, a bullish breaker. So low, high, lower low. And then these up close candles, that's the breaker or breaker block. All right, so traded halfway here, pushed higher, right? And again, we have rule number one. We have, let me see, get over here. All right, rule number one. Oh, this thing is like it's monkeying around, just playing around. Let's see if we can. Okay. Now it can't get away now, right? Because we see it. Still gonna give me a hard time though, huh? Oh. All right. So rule number one, wait for a run on stops. We have that here. Rule number two is wait for a market structure shift. We have, this run above this swing high with this candle here is the market structure shift. right? That would be the market structure shift here. Put that on the right. So that's your market structure shift here with this candle here and the retracement. What's the thing say? Wait for a pullback into a premium or discount somewhere below 50% of the range. In this case, we have a breaker here. That's a little bit tricky, right? So you want to trade utilizing the breaker, all this fair value gap, right? So this is what I did. And this is a hidden OTE model, hidden optimal trade entry, utilizing the market structure as not the swing low, swing high, but utilize a market structure to anchor your fibs onto. In this case, I utilized the order block, right? And this gives me my optimal trade entry long into, again, this higher time frame PD array above 50%, above 50% of the range of the trading range, because this is where, right? This is technically, we have like inside days, right? We also have, in this case, this is an inside week. It's inside the previous week's range. So we don't necessarily have to do that. We can keep it inside the previous week's range. So you can see price broke market structure here, retraced back into a discount, into the breaker, and then rallied back into a premium range, back into premium. And this was the premium, right? This was a draw on liquidity and the premium section of price action of the previous week's range. Hopefully that made sense. Anyway. All right, so we had the breaker market structure retrace into this breaker block. Halfway, push higher. This is Wednesday at 10 o'clock, 2200 hours. And then we have Thursday. And one of the characteristics of Thursday is a high probability that Thursdays will be what? A reversal day. So we want to look and see, especially with an inverted weekly fair value gap here. And again, I was looking forward to close the gap, which would have been here. It didn't do that. I'm gonna take that back off because the chart is looking kind of like a lot going on, but it is a battlefield, right? So, all right, so let's take that off, and you can take that back off, right? As we understand, right? So we have that push here on Thursday at 10, and it's 10 a.m. candle. And again, this is a 4-hour chart. So we had another run on stops here. And then so this time frame, you have a run on stops. You can either wait, right? Say, hey, I'm waiting for a pullback into a PD array and then see what price decides to do, right? Maybe trade back into this order block here. What's this? The opening price is 6073.75. So you can either wait and say, oh, all right, because you can see price traded right back down into this 4-hour breaker here, and then it pushed higher, closed here, opened here, pulled down into part of this wick. And again, we treat wicks like gaps, so you can break that into quadrants too. Same as you can do here. So, all right, so we're gonna look for a trade here on Thursday, right? Thursday at 10 a.m. on the 10 a.m. candle. What's going on here? So in that case, you can go to the 1 hour. I'm gonna go to the 15-minute. Larger than life. So all right. Here you can see price ran above the Asia high, or the previous day's high in this case. Ran the previous day's high and pulled back inside of the range, inside of the previous day's range. And we have another, and I think I told you guys that I love to trade with inverted fair value gaps. They make my life easier. And you can see this gap here, consolidated, broke below. It was used before, right? I'm gonna highlight it. I'm gonna drag that all the way over here, because why not? If it's for the streets, you treat it like it's for the streets, right? Drag it through the street. I'm just joking, man. Anyway, that's a 15-minute fair value gap. 15-minute inverted fair value gap. Again, you can see consolidated inside of this and price dropped. Boom. Boom. Let's see if this is an optimal trade entry long opportunity. Let's check that. Boom. Optimal trade entry long, utilizing. And why did I choose this low? Is because this has more dynamic price action versus these lows is like chop, 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 chop. And I think I definitely mentioned previously that we were looking for these lows to be ran because it has so many relative equal lows here. The question was when, right? 2216. Well, 2216 is the length of the video right now, and I actually don't edit the video, so whatever, right? I do anyway. So yeah, that was an optimal trade entry long on Thursday. At we had news. Why aren't you? All right, unemployment claims on Thursday at 8:30. So it looked like it didn't do anything substantial. Price opened up 9:30 here, ran the highs. 9:45 candle, ran the lows, and that gave you your entry here. So would you have been wrong if you entered off of this fair value gap for the long entry? No, you wouldn't have. Because what's the rules for the 2022 mentorship model is that you have to accept, you can enter here, but you have to accept that price will pull back down into the lower fair value gap, and that's exactly what it did here. But you don't even need that, right? Because if you're just dealing with optimal trade entries, is you could have entered this off the 61.8 level here, long, targeting the previous day's high. And again, we have price running that high and pulling back inside the range, and then it's respecting. You can see it for yourself. I don't have to talk it. You can see price just stabbing up into it, sweeping inside of here, sweeping in there. You can use that as a wick through the quadrants, so you can treat that as a rejection block. I'm not very versed with rejection block, so I'm not going to talk about it because I don't care about it, right? Doesn't add any value to me at this time. But everything else is utilizing the wicks as gaps. That's good enough for me. That's a PD array, especially these inverted fair value gaps, which clearly outlines or signifies a change in the state of delivery for price action. And you can see it again. I just love seeing these things like you can't even deny it, bro. Like, give me a break, right? Anyway, so you have that here, 1500 hours. This is 3, 3 p.m. EST, all the way into the close. So probably, well, keeping that weekly inverted fair value gap and then this 15-minute fair value gap in mind, probably would have had your doubts if you should have taken this type of trade. You could also count this as an inverted fair value gap as well, because it's been violated. And then you can see price over here is reacting to it, or even closer, right? When you're in the heat of the battle, right, you probably would have missed this one. But if this was on your radar, then all right, it's not the best, but it's not the worst, right? You can see it had been violated, but this is even clearer, right? You can see consequent encroachment halfway of this is being respected. And if you wanted to pull it up to catch this small volume imbalance, you could do that too, right? Now is even better, right? Talk to me nice. Money talk to me nicely, right? Talk to me nice, right? That's the model, right? That's the model. So this here, all right, so that's Thursday. Friday is a continuation of the short from, it just kind of bled out, like Asia session bleeding into the London session, bleeding out in like a consolidation downward channel. And so that was the Thursday long short term market maker buy model here. Let's see. I'm just being curious. What did it say? Challenge yourself and have fun, right? So let's see if we can. Looks a little bit clearer, right? Like, looks a little bit clearer that's a buy model, right? No. Looks clearer, right? Original consolidation. You have this pull back, more consolidation, sweep below it here, and trade back up. Boom, taking out the original consolidation here. Anyway, not sure if that's a clear explanation, but that's not the purpose of why I brought it up. Do you want to exit? Yeah. All right. And then we have here price trading back into that 4-hour breaker, but also one thing when price, I was looking at this and like 8:30 actually. I was like, oh, it's no, to my knowledge, there was no news. There was no high impact news today. But I was thinking like 8:30, I was thinking, yo, price is really, really close to the previous day's low. And then like, why wouldn't it go there at 8:30, right? This is 8:30. And it pulled back up here into this consolidation and then dropped. So it took out, and you can see it here, reacted to the previous day's low, and then it took it out, stabbed below it, pulled back up, opened here, dropped. And then it's like halfway of that 4-hour inefficiency. Right? And then you think, oh, where is it going? So the same strategy, purge and revert. So purge price here, You have a break in market structure. You have a retrace into here. So if you missed this entry, you had this entry here. Let's take that. And this model here, you had multiple opportunities here. This is the Asia session. You probably would have missed it, but okay, because who's trading this? Right? Who's trading this? But this is also a model, and it's a continuation pattern. So this is a sell model below here, and then this is a continuation pattern for even bigger market maker sell model. So previous day's low, then we get into I usually put if you ever see my charts, then so this is I always put previous day's low, then I put ×2, so I know that it's the second previous day. So this one I would put previous day low, and I would probably leave it like that, but ×1, so I know that it's the previous day's low. And then this is the previous 2 times, sorry, second day. And then ideally, and then we have the weekly opening price. Or for those of you that do the new week opening gap, you can do that too. But I just use the weekly open. That's how I learned initially, is the opening. So I prefer that. And then, so that's good. That's excellent risk to reward ratio just off that, right? And this is the midnight. You have accumulation. This would be manipulation. This would be distribution. And then price ran back up to this consolidation or the previous day ×2 low, reacted to that. But this is also a break in market structure right here. This is also a break in market structure right here. And then you have a pullback. I am in like I don't want to say a trading group, but some of the guys were saying that, oh, it looks like price is going to continue bleeding out into the close. But I noticed this, and I also noticed this is a breaker. It doesn't look like a breaker, but it is, right? So you have the low, high, lower low. So this big bull bar here, 11:15, is a breaker, and you probably can see it clearer on a 5-minute chart, and you do, right? All right, so low, high, lower low. So this is a breaker. You go back up 15 minutes. So I'm gonna throw that. I kind of like lean heavily on 4-hour chart and the 15-minute chart. 4 hours, the 1 hour, 5 minutes, you can read it yourself. 15-minute chart removes the blur. 15-minute chart does make life a lot more easy. The 4-hour for me makes life a lot easier. And the 15-minute chart, including increased profitability potential. Here you trade what you see and not be too locked in and too greedy. But anyway, this is clear, right? This is clearly a violated bearish fair value gap. It's violated here. And again, we have a run on stops. You have a run on stops here. All of this swept below here into that 4-hour breaker, still sensitive. Market structure shift. I hate when the caps are locked, like, and let's even that out by holding the shift key, right? I'm on a Windows computer. Anyway, we have that market structure shift with this candle, and we have a pullback into this consequent encroachment of this inverted 15-minute fair value gap. And there's your long into the close. We would have been targeting this here, but again, remember that the draw on liquidity Again, this is and again, right, like I said it before, this is internal range liquidity into external range liquidity. But this is the target. This was the target. It didn't reach it. It didn't reach it. But right, so it's a draw on liquidity. It doesn't mean that it has to take that out, right, in order for it to be an acceptable model. And so yeah, that's all the yapping I got for y'all, man. Hopefully I added some value. If I did, please like, comment, subscribe.